Hello guys, and welcome to my YouTube channel once again. In today's video, I want to share with you a simple way you can analyze the market to trade in volatility indices on the Rev. Yes, volatility pairs in the Rev. I'm on V75-1As right here and on the weekly time frame because I want to do a top-down analysis. So I usually come to a higher time frame and try to mark out some important zones that will be guiding me in my trades. Also, the first thing I do is to come to the higher time frame, like the weekly time frame, to see if I can get some key levels to mark out and key trend lines to mark out and so on. So first of all, if we look at this, we can see that this particular pair has been in a downtrend for a very long time. It's been in a downtrend for a very long time. So, and currently, as it is, this is the last high it broke. If you look at it, this is the recent high, like when it was coming down, and this is the low right here. So what the price did was it came up and broke this high and created a change of character. In smart money concept, that is change of character. So it created a change of character at this point. Let me use a crosshair tool, guys. So you see, so from this point we are expecting the market to be buying, but creating a change of character is not a confirmation that the market will continue buying, because it can still decide to go back down to break this particular low here. This low here, it can decide to come down and break this particular low here and still continue bearish. So after this change of character, we expect to see another break above this particular high here. This is the last high it has created in the market. We need to see another break, that is market to come up and go through this high. Then we'll have a break of structure, so we then confirm that the market is now in an uptrend. So for now, it's still somewhat in a downtrend. That's on the weekly time frame. That's what we are seeing, guys. All right, so let's mark out the important zones that we want to work with in the market. The important zones. So we look for key levels. You see that right here we have let me place this horizontal line here. This point where I'm placing the horizontal line, I'm going to show you with an arrowed line why I decided to drop the horizontal line right there. So as you can see right here, market bought from this point, bought from here as well, bought from here, and it's about to buy again. It's trying to buy again from here. So this is an important level. And market also sold. Did it sell? Market, you see, market bought from here, sold from here as well. You see, bought from it. So this is a key level in the market, a weekly time frame key level. So it's a very strong level in the market, guys. All right, so let's check for another key level in the market. Let's look out for another key level. All right, I can see another key level up there. Let me duplicate this, then take it right here, guys. This is another key level here in the market. You can see, let me try to zoom in a little. So you can see the market reacted right here. It bought from here, bought from here, sold from here, bought here, sold here, sold here, sold. So this is another key level on the weekly time frame that market likes reacting to whenever it gets to. It likes reacting whenever it gets to. And I can see another stuff somewhere here. You can see that after market broke this level, it came down. It did not get to this low, the swing low, the previous swing low it created. So it went up again, reversed, and did not get back to this swing low here, to this low here. It got back up, then reversed at this point. It didn't get back to this other low. So the market was somewhat in an uptrend at this point. So in that case, we can join these lows with a line, with a trend line, because we are about to figure out something, guys. You see, so this is a line. We can join the three lows. Okay, all right, so you can see, so from this it indicates that on the weekly time frame, market actually broke through. There was a little uptrend right here, and market actually broke through this uptrend, and somewhat is coming back to retest, but we are not sure yet. All right, so until we go down to a lower time frame, to a much lower time frame, then we will know what's actually happening in the market, because we do not want to trade on the weekly time frame. We are just trying to get some major structures and zones or areas in the market from this weekly time frame. So right now we need to go down to the daily time frame, guys. All right, so here we are on the daily time frame, guys. Now on the daily time frame, we have to try to zoom in a little to see some points clearer in the market. And mind you, whenever you move from one time frame to another, once you're doing a top-down analysis, most times you might need to adjust your previous markups, like these horizontal lines. There are times you just mark them up, then when you go to a lower time frame, you discover you need to adjust them a little to put them at the right place. You're trying to place the lines to be where it fits best. Like in mathematics, they say line of best fit when you are plotting a graph. So same is applicable here. You have to put your line where it best fits, not just draw the line anywhere, guys. All right, so as you can see right here, what we did on the daily time frame, on the weekly time frame is more obvious here. You can see market sold here, bought here, bought here, sold here, bought here as well. You see, then it bought here also, and it's also deciding what to do around here. But around here, what I am seeing here is a kind of a head and shoulders pattern, an inverse head and shoulders pattern. You see market sold down from here, got to this point, reversed, went down, came back again, and then you see it's been dancing around here. So it's a kind of a head and shoulders pattern that it is forming. So we expect market to possibly go up after it breaks through this, because there's a neckline here which we are going to mark out. If we can break through the neckline and retest, then there's a possibility it's going to keep buying. Meanwhile, guys, remember there was a breakout on the weekly time frame which can lead to a possible sell-off. So we cannot just confirm that market is moving in this direction yet or not. And also, guys, if we go back to the weekly time frame, let me show you something I forgot to mention, guys. As you can see, considering the previous week's candlestick, which is this green candlestick right here, this is an indication that the market will buy the next, that is the current week, will be buying. And you see it has been buying. After it dropped a little, it started buying up. It might buy and get to a certain level before it continues selling, because we are expecting market to sell from this breakout here. We are expecting market to sell. So this retest on the weekly time frame is what we are expecting to get to somewhere on this trend line. Then it will sell massively to the downside. It will sell massively before it will go up, because market has been in a downtrend for a long time before it goes up to either break this structure or do whatever it wants. But what is happening currently is what I'm telling you guys now. What's happening currently is what I'm telling you guys. The market will want to buy to a certain level before it sells. So we just need to mark out those levels which we are expecting the market to buy, and we're looking at that on the, let's go to the daily time frame to see if we can find it. All right, so now on this daily time frame, you can see that this is actually another zone in the market. Let me mark it out. This is another zone in the market, guys. I would want to change this color to differentiate it from the weekly time frame. Where is it? Sorry guys, I don't know what happened. Did I delete it? Sorry guys. So let me look for a different color. Okay, so you can see, let me zoom in and let's look at it. You can look at the daily time frame. You can see that this particular line I've just put is actually on a key level. Market was buying here, you see. Market bought here, sold from here, sold here, then bought. You see, it broke through this thing, then retested with a wick, then it bought through, it bought up again. Then you see this is sold here, bought here. So this is a key level in the market. Then it has been buying here, then sold, came back, retested, sold, came back, retested. It's still dancing within here, and you can see the head and inverse head and shoulders pattern I was mentioning previously. All right, so now marking out this thing and gives us an idea. But guys, if we want to wait for this daily time frame chart setup to play out for us, it will take days. So we have to look for opportunities in the market. So we have to go down to a lower time frame, because we need to go down, because if you look at this, all this movement in the market that we are seeing within this point, within this place, you see what happened in the market. It was moving bullishly, impulsively up to this level before it came down a little, and you see what is happening within here. If you go down to a lower time frame, we might find an opportunity to either go into a trade or know what the market is about to do next. So let's go down to the 1 hourly time frame, guys, the 4 hourly time frame, sorry. All right, now so you can see on the 4 hourly time frame, these daily candlesticks that we had along this place is actually giving us, showing us that there was an uptrend. There was a little uptrend here, and there is a breakout and retest. Now let us just use a line to draw them out first, to mark them out. Let's use a line to mark them out. Use a line to mark them out. Okay, let me just get this, and let's duplicate this. Can put it above here like this. You see, guys, so there was an uptrend here, and later it broke out. So what are we saying, guys? I hope you can see clearly that this 4 hourly time frame uptrend, this uptrend here broke out, then came back to retest this zone, and sold, came back here, sold, came back here, and it might possibly sell again, guys. It might possibly sell again. Initially, when I wanted to do this video, the market was on this candle. That's when this particular candlestick was forming, but I decided to do something else. Something else came up that was actually needed my time, so I left it. Now, and I think it's about 4 hours from when I saw it. So you can see that with this candlestick, it indicated that the market was going to sell. So the next candlestick just sold down to this point before buying back up again. So there's a chance that it might still sell again. Why I'm saying so is this: if you look at this daily candlestick, this 4 hourly candlestick here, the market was moving very impulsively from here to here. Then this structure we are seeing right here on the 4 hourly time frame, if we go to a lower time frame, we'll see a kind of a wedge pattern. We are going to see a kind of a wedge pattern, So that's what we would see, indicating that the market might break out. That if there is a breakout, the market will still sell down to this point and might possibly sell down or come back to break this resistance zone above. So what we are going to do now is to go down to the 1 hourly time frame first of all, to see what I'm telling you guys. So you can see that movement here. Here is the movement, guys. From here, the wedge pattern I'm trying to tell you. Look at it here. Then we go up again to put the one above. As you can see, this thing is very simple. It's just taking time because I'm explaining while I'm doing it. You see, it's something you can just do within 3 minutes and you are done. Just within 3 minutes you are done analyzing the market, guys. So just looking at this, you can see that this is the wedge pattern here. This is an ascending wedge indicating a reversal, and it is actually a corrective impulse, because this the market was moving impulsively, then it is still buying, though it's no longer in an impulsive movement. So it is a corrective impulse, guys. So with this corrective impulse, we expect, or impulsive correction, whatever you would like to call it, we expect market to sell. We expect market to break through this trend line here, then sell down here. Mind you, we are on the daily, on the 1 hourly time frame. So even if you can just wait, let's go to the daily. Let's go to the 15 minutes time frame, guys. You can see it here, very clear on the 15 minutes time frame. It is very clear on the 15 minutes time frame. So we expect a breakout. We only need, what we need to do is just to wait for market to, either you wait for a breakout, because I will really advise that you wait to see that there is a breakout of this trend line and retest. Once there is a breakout and retest of this trend line, then it gives you confirmation that it's going to sell. Guys, I bet you it is going to sell down to probably this level before it tries to do anything different. It might sell down to this level before it tries to buy again seriously, guys. So let's just wait patiently for the market to break out. Though if you're an aggressive trader, you might want to go in for a trade, but it's not advisable because you don't know what the market wants to do. Market has its own plans. You might say that market has been reversing at this point, at this particular zone here. Let me just see if I can mark it with this. Market has been reversing each time it gets here, you know. So if you want to, like, you have some money you would want to risk, if you see this kind of a setup, then you would want to make sure you put a very big stop loss. That is, your stop loss must be somewhere around this zone here. Your stop loss must be somewhere around this zone, because there's every chance that if this market wants to sell down here, it might have to get to this particular level here. It might have to get to this level before selling down again, you see. But to be safe, to be on the safer side, it is best to wait for the market to break this trend line, come back to retest it, then you sell in peace. You just sell in peace, or with peace of mind, guys. So that is it. I can leave this trade at this, I can leave this setup at this point, then wait for it to do mirror. Or guys, also, if you want to scalp this market, if you want to do a little scalping, just wait for a confirmation here. If you see a confirmation that is going to sell like a bearish engulfing candlestick pattern, or a pin bar, something like this, then you can just go in, either a bearish engulfing like this, or a pin bar. Just then make sure your target is not below here. The target is somewhere around here. You make some good money with your little even with a small lot size. You make some good money and you leave the market until there is a breakout before you can trade with let's say your full chest, guys. So that is just it. It's very simple to analyze the market. All you need to do is to always go to a higher time frame, like the weekly time frame. Look out for the structures that are available right there. Look out for the structures you see available. Mark out the key levels and zones. If there is an opportunity or a possibility to draw your trend lines, you draw them. You go down to the next time frame, that is daily time frame. You do same, then you go back to your 4 hourly time frame till you get to a much lower time frame. Guys, there's a chance that this thing is going to sell because of this candlestick pattern I'm seeing right here on the 1 hourly time frame. This candlestick pattern indicates a reversal, so it might sell at this point. But on the daily 15 minutes time frame, we need to wait for a confirmation before we go in, because there is also a chance that this candlestick here, the current 1 hourly candlestick, sorry, 1 moment please. Okay, that the current hourly candlestick can buy up to this level before selling, you see. So let's take note of these little things in the market. It's not difficult, guys. And also, don't forget, I am planning to reveal everything I understand about price action to you guys in a free training. It is a free training. Don't fail to attend the training. The link to the Telegram group where I'll be updating you on the information regarding the training is in the description of this video. Do not hesitate to join that Telegram, to click that link to join the Telegram and get updated, and wait for the updates, because I am going to teach everybody for free. I want as many as you are to just join. I want people to make money this year, guys. I want us to make money. There are so many things that are causing you people to not to make money. Most of you, if I will ask you to do some evaluation of or analysis of how much you've made last year, the whole of 2023, from trading, it might be zero. Because the more you make today, you lose. You make today, you lose tomorrow, and you might lose all the money because of some little things that you may know and may not even know how to apply. Some of you know these things already. You know these things, but you don't know how to apply them. So let's go into this free training, which I will try my best to reveal some things which will be very beneficial to a lot of us, guys. So don't fail to attend this training. The link to the Telegram group is in the description of this video. Do well to go down there and click on that link and join us in the Telegram group. Meanwhile, please like this video, share this video, comment if whatever you see. I see that some persons have complained that my voice was not really audible enough in the last video I made. I am going to redo that video. I'm going to redo the video with the same strategy because I want everybody to benefit. I don't just need views, I need people to benefit, guys. So I'll do that. So till my next video, I'll say we should leave it at wherever it is right now, and we'll see in my next video. Peace out, guys.